Yes. Hello and welcome to yet another video with Statistically Speaking with Itumeleng Kiseboni. So with this video, I just want to take us through the background of the Bitcoin and S&P 500 and the gold price and the CPI, the Consumer Price Index. So I'll go through this and then at the end of it, I'll also go through the problem statement that I've generated. Now, remember, I've generated this problem statement just to give the project a bit of context. So, I'll be reading these out. I hope it's still as engaging as I hope it'll still be as engaging with me reading it out. So let me take it away. I'll start with Bitcoin. And then S&P 500 and then gold history and the consumer price index history. So firstly, Bitcoin was first introduced in a white paper titled Bitcoin, a peer-to-peer electronic cash system. This was published in 2008 by an unknown entity that is identified by the name Satoshi Nakamoto. What was proposed in this white paper was a decentralized digital currency that could be transferred electronically without the need for a central authority like central banks. So the launch of the Bitcoin network began when Satoshi first mined a block of Bitcoin, known as the Genesis block, in January 2009. Its first transaction occurred when a programmer purchased 2 pizzas using 10,000 bitcoins in May 2010. 10,000 bitcoins to purchase 2 pizzas. So this is known today as the most expensive pizza order in history. Can you imagine how much 10,000 bitcoins is valued at today? That's why it's the most expensive pizza order. Now, although Bitcoin struggled due to its volatility, it has attracted interest from investors, financial institutions, and tech companies, leading to a robust ecosystem around cryptocurrency and blockchain technologies. So, Bitcoin has inspired the creation of thousands of alternative cryptocurrencies, fueling discussions of the future of money, finance, and decentralization. This is Bitcoin's journey as a transformative force in the world of finance and technology. Quite interesting, huh? And now the S&P 500 was created in 1957 by a financial services company named Standard and Poor's. I guess that's what the S&P, which is today called S&P Global. By design, it measures the performance of the 500 leading companies from various sectors such as technology, healthcare, consumer goods, and financial services. Its key feature is its market capitalization weighing methodology, which results in companies with higher market capitalization having a greater influence on the index's performance. This means larger companies like Google, Apple, and Microsoft have a greater impact on the index compared to smaller companies. Now, many investors and financial professionals use the S&P 500 as a reference point to evaluate the performance of their portfolios or investment strategies. With its long history of the US economy, it makes it a great tool to assess market trends and make investment decisions. Changes in the value of the S&P 500 are closely watched by investors, economists, and policymakers as an indicator of the overall health of the US economy. Movements in the index can influence investor sentiment, market trends, and economic forecasts, making it a key barometer of market performance and investor confidence. Now, one of the most significant events in the history of gold is the California Gold Rush of 1848 to 1855. This led to a massive influx of prospectors seeking their fortunes in the gold fields of California. This event not only transformed the region but also had a lasting impact on the global economy. Gold has been used as a form of currency and a store of value for centuries. The first US gold coin was struck in 1787, marking the beginning of the country's gold coinage. In the modern era, gold continues to be highly valued for its use in jewelry, electronics, and as a hedge against economic uncertainty. Central banks and investors around the world hold significant amounts of gold as a reserve asset. And now the Consumer Price Index. This is a crucial tool for measuring inflation and price changes in an economy. By tracking the average change in prices paid by consumers for a basket of goods and services over time, the CPI provides valuable insights into the cost of living and purchasing power. The CPI is calculated using a weighted average of prices for a diverse range of goods and services commonly purchased by consumers, such as food, housing, transportation, and healthcare. Now, changes in these prices are reflected in the CPI to gauge overall inflation levels. Economists, policymakers, and investors closely monitor the CPI to assess the impact of price changes on consumers, businesses, and the broader economy. Inflation trends derived from the CPI influence monetary policy decisions, wage negotiations, and investment strategies. The CPI serves as a valuable tool for adjusting wages, pensions, and government benefits to account for changes in the cost of living. It also helps individuals and businesses make informed financial decisions based on prevailing inflation rates. Yeah, so that is the background of all these indices that we'll be keeping a close eye on, and the background of Bitcoin itself. So here is the problem statement that I've generated. It will most likely change during the course of the project. So the CFO of Investment Fund International, that's a company I made up, is looking to diversify their portfolio further, and they do not know much about the performance of Bitcoin. They are looking for a hedge against losses in case the traditional assets lose value. Now, I plan to give a full analysis on Bitcoin's performance against indices like the S&P 500, gold price, and the consumer price index. After this analysis, I will give recommendations to the CFO of whether Bitcoin is worth investing in or not. Hey, yeah, I think that gives a good description of where this project is heading and what is to be expected from it. So I'll end this video here, but keep an eye out for more posts from Statistically Speaking with Itumeleng Kisebuen. Thank you.